Well, we're looking for approximately $32 billion in revenue and about $9.70 in GAAP earnings. But there are two or three things that are going to be extremely important. The consistency of the revenue growth. This company has produced 23% average revenue growth for 33 straight quarters. That's 8 years and a quarter for those counting. And people want to see them do that again. That's the first checkbox item. The second one is this should be, or last quarter should have been a peak operating expense quarter for the company. For the first time ever, they gave positive forward expense guidance. And they said that their biggest structural expense item, what they call TAC, or traffic acquisition cost, that's the revenue share payments to the Apples and the Samsungs of the world, that growth should start moderating. So people are going to look to see whether that cost expense, that line item, did in fact moderate. And then third, people are going to be listening for any color commentary they can give around the EU Android fine. I doubt they'll touch that on the earnings call, but anything they could say about the risk to the business model going forwards would be very helpful to investors.
What would be the weak spot that you would have your eye out for? What would be the one area that if this number comes up a shade light, you'd worry?
Well, what's caused the stock to trade off most consistently over the last 4 or 5 years has been an expense negative surprise. Margins come in lower than expected, i.e. because those traffic acquisition costs have come in too heavy, less likely to happen now, or because they're just spending a lot more on some of these other bet investments like Waymo. So if there's going to be something that would be the fly in the ointment tonight, it would be they're heavying up on investments in Waymo or in life sciences, and we didn't expect it, so we're going to take the stock down. That would be the negative to watch out for. I don't think it'll happen, but that's what we're watching for.
You know, Mark, there had been thinking that GDPR would actually benefit the larger platforms like a Google and a Facebook. And this earnings report, we might actually get some color on that. Baked into your estimates, which are higher than consensus, do you also believe that? Do you think that is fueling some of the upside?
We weren't expecting that to happen, but the anecdotal evidence seems to be that GDPR did not have a negative and may have had a small near-term positive impact on the large platforms like Google and Facebook for two reasons. One, these two companies spent an enormous amount of time, 2 years and I don't know how many millions, just making sure they were prepared for GDPR. They could afford it, and they spent the money and the resources so they were prepared. And the second thing is both of these companies get a lot of what's called first-party data, and so they don't need to rely on third-party data. They don't have to have as many question marks as to whether they can keep using that data to help their advertisers target their users. So there was less controversy for them as they went into the actual implementation at the end of May. Those two factors mean there probably was a little bit of a bump up for them in revenue, both Facebook and Google, just from GDPR implementation.
Give us a thought on Amazon.
Amazon's probably right now the most beloved of the FANG stocks. The fundamentals, the revenue growth is actually accelerating, and margins are expanding. Margins are expanding because AWS is, again, one of their highest margin businesses, is showing a little bit of acceleration. That's an industry trend, we think. Microsoft's numbers seem to support that. The other thing, though, is this new revenue stream for Amazon called advertising, or AMS, Advertising Marketing Services, Amazon Marketing Services, and that's also a high-margin business. So we're going to expect probably another operating income surprise to the positive this quarter, like we have from the last 2 quarters because of AWS and because of advertising. If they show that, the stock can continue to move higher.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.